Already. Already. Alright, guys. I think we are live. Hold on, let me... 1 second. Okay, so I think we are good. I'm just gonna get started with the show. I know some of you guys gonna come in later. Today, not much, just going to be the same old, same old. I'm gonna try to update the price action real quick. Kind of expected today, kind of red day. So one of the things that I want to kind of look into is well, let's just enjoy, you know, GameStop Twitter account or X account here, and I want to see what's going on here. It seems like they always try to post something here, so you know, free advertisement, why not, right? So we'll come back to that in a minute, but first let's look at the price of GameStop here. So we have here hold on, yes, we have here the price of GameStop. Obviously it went down today. Now, perhaps mimicking what is happening in the SPY. I'll show you what the SPY in a minute. But you know, GameStop kind of did a pretty good turn right here, but then all of a sudden it went down quite fast. Whether there was an economic data coming and kind of kill the momentum, or they wanted to kill the momentum anyway. So yeah, I mean, it's nothing new, nothing kind of out of ordinary here, you know, quote unquote. The things that happen with GameStop is always kind of like suspicious anyway. That the fact that, you know, all of a sudden you have all this sale volume coming in, 65.7K right there in just 5 minutes candle, right? So are you saying that all retail are selling at that price right there? Not a chance, right? So there might be some downward momentum to try to kill the upward momentum here. But as far as how this stock is going to perform, it really depends on the broad market in general currently, obviously. If you think about like the technical like part of what GameStop move or how GameStop move, it really, the volume really picked up on the earnings, right? Or around earnings, as you could see here, 66 million shares being traded back and forth right there. While today, it's back down to 5.5 again. So while it's kind of like twice as much as it used to be before earnings and all that stuff. So it used to be like 4.6, and then you have some days like 2 million shares right there, 3 million shares. So less than 1% of the float is being traded, while today was 5.5. So it picked up a little bit, but still though, the diminishing volume is kind of allow these market maker to bring the price down as quickly as possible, right? But this is good for long-term investor. And I know what's up. How are you today? But so really, my price target has always been looking at this lower price right here. Again, I'm not telling you that it's going to go down there, but it's good to mentally prepare for that type of price action, right? my thought has always been, if the SPY comes down, crashing down, very fast, people are going to panic, and perhaps they're going to try to sell it and then try to pick it up cheaper. So to me, that's dangerous, right? For investor out there, because you might not be able to get it down here. You might, like cold feet, right? People who are selling right now and then try to buy it at a lower price usually get cold feet because they don't want to pull the trigger, and that's why you're just diligently adding small amount at a time so that you don't get a headache from trying to time it. And especially with this stock too, you never know what they're going to do with the stock, whether they're going to cover today, whether they're, well, if you believe in the short squeeze narrative here. My opinion is that, just the fundamental alone, I think this company can carry a balance sheet that makes sense to people, like very, very rich people too, that, this company has a very high upside to come, right? And so, but it has to be demonstrated through the balance sheets. How much money can they generate every single year? If you focus on the balance sheet and see line by line, you would understand why people are still so enamored by this stock, right? For those of you who doesn't know what. Okay, good. I'm okay. I'm just, been busy too at work, and there's some new changes, and I don't like it. But whatever, it is what it is. It's called work, right? You go to work, earn some paycheck, hopefully you put some away, and be done with it. So as I was saying, if you were to look at the balance sheet, you could see that they have cleaned up pretty well, contrary to what you might hear from the media saying that they're a terrible company to own and all that stuff, right? That might be true, but I would encourage anyone to check it for themselves before believing in anything that the media is saying about this company. So that's that. Nothing new there. So let's look at GameStop here. I'm sorry, GameStop. Let's look at SPY right here. So currently, you see that the SPY is coming kind of down a little bit, but perhaps it's to fake out some people to sell out right here, and then they'll continue their upward movement. But it could be that this is it. The what is it? The M. It's called the double top, right? Let's see. 1 second here. Okay. Sorry. All right. So now whether it's going to drop down from here, we don't know that for sure. But if you were to look at today's movement, price movement, right, it's pretty substantial, in compared to the last. Oh, this is a face. Never mind. It's like this is the all-time high back in 2022, right? And those were the year of people were like, oh, it's gonna continue to go up, don't worry, right? And then boom, right, coming down. So is it going to happen right now, today and tomorrow and the weeks to come? Well, it's kind of scary because something happens, in the bond markets too, right? If you look at what is it? TLT, that's the 20-year treasury bond right here. You could see that it's peaking up again. And so that means that the yield is coming down because people are chasing it up. So this is the value of the price of a bond, right? This is 20 years. Usually it doesn't move that much, in magnitude. But within this couple of years, you see this violent price movement of this particular bond, right? And this is a 20 years. So when it's up here, that means the bond only pays zero, a very, very low interest rate. But people were stashing money away anyway because they were scared. They were scared of what might happen after COVID, after the stimulation, after the stimulus money coming in because of what happened to COVID. And then, of course, when that happened, interest rate was still at zero, so to speak. And so people were just like trying to grab on to as much bond as possible, so to speak. And so you're kind of seeing it happening right now too. Now currently you could get 4% right now, 4% in 20-year bond, a 20-year treasury bond. So every single 4%, or every single year you get 4%. And so if people are chasing that rate, it means an economic downturn, right? Because in 20 years they are happy to have the 4% return, risk-free. And so that's why it's so important to look into the bond market, to predict the what is going to happen to the stock market, so to speak. So when it's down low here, usually that's when the rate is higher. People think that Jay Powell was the one, or the chairman, is the person that control the rate, but it's actually the bond market that actually control the rate. Depends on who buys, who sells, and who believes in the the government debt system, right? And so if you look at the volume right here, it means that people are exchange bond way high in volume. It's like each candle, if you look at it right here, that's 51 million shares being traded back and forth, right? So will it peak, to that? And the reason why I make this lines right here is to mark, okay, what level has it been interacting with? And so if it breaks through that level, off to the race again, right? Now it might ping pong back in this channel here. Who knows? It really depends. So if the treasury bond keeps going up like this, it just means people are chasing that rate rather than the stock market. So the stock market will do a drop, so to speak. How low? It depends. It really depends on what's going to happen. I think the corporate earnings is going to show a downturn, meaning like, the big tech company out there, they're not going to make as much unless the wages keep up with the inflation. You might be able to kind of delay it a little bit more, but I don't know. I just feel like today was kind of I wouldn't scare people, honestly. I hate to kind of, tomorrow is going to be the doomsday, right? Hi Lynn, what's up? How's everybody doing today? I'm kind of low energy today for some reason, so I apologize. But I don't know. I think it might come down to fill this gap right here. If you kind of look at the gap fill theory right here, and so, but if it break through that support level, it's going to scare some people and drop. Boom, right? But of course, like it never goes straight up or straight down. So there will be some days it will bounce a little and, do one of this downtrend right here. That could happen as well. But if you have a panicking, induced type of drop, just be aware that, GME is going to come down with it as well. I bet you anything, right? How low can it come? I don't know. It depends on how many people are panicking, right? And that's usually the opportunity for people who are prepared for this and not freaking out to see the price at $9, for example, right here. And if you sell at $9, that's on you, right? Again, this company, the price action has nothing to do with the actual company itself. You have to separate the two. So the actual company has to come from the balance sheets right here. So long as the balance sheet still the same, the price really doesn't matter, right? It's a matter of whether you think it's overvalued or undervalued right now. If you think it's going to go higher in 10 years or more, you buy it. If you don't, then you sell it, and hopefully you guess it right that it's going to go down to whatever price you think it's going to go down to. And by that time, what most likely to happen to if you were to do that, people tend to forget about things, right? Let's say you said, oh, GameStop is going to go down, I'm going to sell it and then I'm going to buy it later on. Some people might not pay attention to it enough and they forgot all about it, and then 10 years later they're like, oh shoot, GameStop is up wherever. So they might be initially correct in the sense that, okay, temporarily price movement is going to come down, but they didn't buy it at the low, right? Because like I said, you get busy and you forgot about it. And so my approach is that, if you want to be long on the company, just buy it, one share at a time, or, set a $100 a week if that's what you want to do too. So that way you don't have to do like one share a day. You do $100 a week, so to speak. So again, this type of strategy is low stress strategy. And I want to emphasize if you believe in the company longevity here. So it has to be that way. Otherwise, you're going to be freaking out when the company goes down in price. You're not going to be, have the conviction to stay with it in the long term. And then also too, if you were to over leverage yourself by borrowing money to buy into GameStop, once you need that money for whatever reason, you run the risk of having to sell at a loss, right? And nobody wants to do that because the company's doing better. Why would you want to sell it? See what I mean? And if the company's doing better, but the price coming down, why wouldn't you think it's an opportunity, right? It's like, it's a no-brainer, so to speak. No problem. Low for me, the better. Good. That's good to hear. I'm just like kind of psychologically prepare myself as well, because when I was up here, I never thought that GameStop was going to be down to $12, right? It seems ridiculous that it's going to come down to $12 a share. And so, I've learned throughout the years to, tame my excitement. And this is how you grow as an investor too, is that, no matter what happened to the price action, you look at the company as a whole. Like, the money that come in, the money that comes out, the money that would be able to grow in the future. How much money is left, so and how many shares are left. Is there any indication that it's going to be diluted? What kind of leadership do you have in the company? So those things are very important when it comes to like evaluating the company from whatever standpoint that you want to look into. So that way, when people are telling you to buy and sell something, including me, right? Don't just believe what I say about GameStop. You go look for it for yourself. You might come across this article, and then you say to yourself, oh yeah, I don't want to touch that. This type of company is very risky, and then right? That's on you too. So Jimmy confirm a downtrend. It's been in a downtrend for a long time, from 21 to now 2024. So it's been 4 years. The fact that they could maintain it down here, it's kind of suspicious too, right? It's almost like they're trying to, make this RSI, is it a stochastic, down here to downtrend like that. I hope it makes sense. No, I'm just like looking at this chart right here. So what does this say? Should you invest $1,000 in GameStop right now? Before you consider GameStop, you would want to hear this. Market beat, keep track of I think I read this one before. They're saying like, oh hey, we have a 5 stock, but Jimmy is not one of them. That's what they say. But what was this? This was back in December 7th, and we know that was after the earnings report that we had. A good one at that. We actually beat expectation here. But they don't want to say that, obviously, right here. So we beat expectation on the earnings and down on the revenue. So of course they don't want to recommend GameStop around here, right there. What is it? December 7th, right here. They don't want to recommend GameStop at $13-14 right here. They want to wait until GameStop is up, hundreds of percentage wise first before they recommend it to you, just like Tesla right now, right? Jay, please forget and sell GameStop now. Exactly. I know, like, for people who have not been in this in this company for a long time, they might not know how egregious those articles are. And that's why, like, I make it a point to kind of show the media aspect of things, and some of this article actually sway people, people like who otherwise intelligent, but they're not well versed in the stock market, right? They would read this type of article and they would run with it, and I've had a conversation with people that are at work, and normally I don't work in the financial industry, but it seems like it you talk to the ball, so to speak. And when you say like, hey, the media is not there for you whenever they suggest a certain stock, you might not want to buy into that stock, right? For whatever reason, they don't connect the two. It's like, oh, why would they want you to do that? And they would ask me that question. I'm like, well, just think about it. Why would they want you to buy Nvidia right now? Why would they want you to buy into Tesla right now? If you look at the news right now, they're pumping Tesla, right? Now, I'm not saying that Tesla is a terrible company to own, not at all, but it's overvalued at this price point. It doesn't justify what they could do, and the downturn that comes in too because of the self-driving vehicle and all that. So the recall that happened a couple weeks ago, right, when they were at the same time kind of promoting that humanoid robotic thing, right? And so again, like, I'm questioning that, and I'm thinking, like, okay, so why are these people can't connect what the media is telling you and then versus what they want you to do, like the intention behind it. And so it's always in my mind to try to see what I could say and could try to convince people to at least look into it themselves. And the only way that I could do that is through the balance sheets, right? And try to steer them, hey, look at the balance sheets. And if you know how to do plus and minuses, you could do it, like, and try to relate it to your own income, right? And and this is why I try to find example that they could relate to, the real life example in terms of income coming from your job and all that stuff, right? Sell them. I want those share and I need them. Share. Yeah, Lynn, I know. My sister has envy. Wait, what are you saying, Lena? She gained. Oh, did she sell already? And she gained $300. I know. That's funny. I know, right? Look, I mean, hey, if she makes money out of it, that's a great thing. But I know, like, this is my point too. Like, I was the same way, when I was in Tesla at the time when it was really low. I think I bought it. Hold on, let me see if I could check into my account here. When did I get into Tesla? It's like the time frame. I was kind of like curious myself too. I think the point is that, like, if you're enthusiastic about a stock and you make like $100, $500 and all that stuff, it's really, really good. At least you make some money out of it, right? But that's not really a value investing, because you could technically earn more if you don't sell it now. See what I mean? If you think of it as a long-term investment and all that stuff, and because you never know what GameStop could grow into becoming. Okay, hold on. I'm trying to look up my buy order here for Tesla just to torture myself. A constant reminder of how far I've become to be a more long-term investing person. Okay. So I sold my Tesla share October 24, 2019. Okay, this is before the run. Oh my God, this is terrible. This is painful, you guys. This is painful. Just bear with me. Okay, so this is when I sold my Tesla. And for a profit. I'm not joking. Okay, so October 24th. Boom. Okay, this is 25. Oh, this is submitted. And it fields. Okay, so October. Oh, this is November. No wonder it doesn't compute. Okay, bear with me 1 second. I promise you I have a point. Okay. Eee. There you go. Tuesday. On the Tuesday of right before the run too. Oh my God, this is painful. All right. So that's when I sold my Tesla share right there. Now at the time, I only have like, hold on, how many do I have? Okay. I have 5 shares. Okay. So I have 5 shares. That was well, at the time, 1 shares was $2.45. Okay. And the reason why you see not $2.45 is because they've been splitting, see, stock split right here. That's 1 stock split right here. That's 2. There's 2 stock splitting. And each time, there was, probably you say it here, right? 5-1. And then another 3-1. So 5-1, and that's why that price is not 200 anymore. But at the time, I was, I made a couple $100 from that. Not much, and I thought I made it. I thought, oh, I'll come back when it's coming down lower, and it never did, right? So my point is that, you never know. Yes, you could have a short-term gain right now, sure. But, you might not be able to catch this, right? So why is that? Like, why was I so oblivion to this? Well, because number 1, I didn't know what's going on with the company, right? I just know about Tesla and I just bought it. Number 2, I did not read the balance sheets, right? Did not know what to, look for. I just know that, oh, Tesla sounds like a great name. Their, vehicle, they're a car manufacturer, tons of cash here could be made in the future. Never thought about like long-term investing or anything. At the time, I was swing trading back and forth, trying to, gain a couple $100 here and there. Now, I'm not saying that I lost money or anything like that, but there's some value in trying to trade in and out, for sure. Yes, but when it comes to, fundamental sound company, or at least, you have Elon Musk. He's, I would say, very highly dedicated to what he does and very exotic, right? Very focused at the time to make something great of the company. And he's been doing that for how long? Since its IPO. Since IPO to the point that was around 10 years from here to here, 10 years of just making the company, focusing on, making 1 car at a time to try to push to the masses, right? And bringing more investor in little by little. And I'm sure, there's throughout this time, Tesla's probably was shorted to oblivion right there, right? Because of these news media try to steer people away from it, and they keep shorting. They call it short and distort, right? They want to distorting the truth of this company. And this is why I draw the correlation between Tesla back then to GameStop right now. Not only that you have a dedicated CEO, Ryan Cohen. I feel like Ryan Cohen is a lot better than Elon Musk, dare I say, because he's highly focused on the price, so to speak. That he's not out there in the social media light to try to boast anything that he couldn't deliver. See what I mean? So very good leadership here. But yeah, so I saw right here. Very painful, but let there be a lesson to you all. All right. Oh my God, there's so many. Jay, they want you to buy current overvalued stock because they already loaded up long their bag on it, and they need somebody to drop their bag eventually once private equity does what they do. True, yes, I agree. Then eventually push that because push. I guess you mean like push it back because they shorted. I guess they turned short on it already. Short side, and then they succeed, and then coming out with a massive profit, and even better yet, if they are completely push it out to zero, the way then they don't pay any taxes. Yes, that is so true, because like it's at zero already, right? You don't even have to close your position, so to speak. I think they're trying to do that to, these big companies now, right? Like, I think Amazon is kind of on its way, kind of to decline. Not sure how many years that's going to happen, but the company's dead, and then they overextended on while they wrote it off with their golden parachutes. Yep. I mean, the CEOs never get, I'm sure they get replaced too. If the CEO doesn't play ball with them, they would get replaced as well. So yeah, that's their playbook, I convinced my sister to buy GME. That's good, Lino. Yeah. Lino's sister, 300 could be $30,000 in 10 years. I know, right? That's what I'm trying to tell her. This thing, we don't know. I mean, it could be 300,000, and it's not a joke either, because of the inflationary, time period that we are in right now. So by that time, I'm sure 10,000, you might not be able to buy anything, right? Maybe a car payment, $10,000 is a car payment 10 years from now. Who knows? Because of the inflation. I know I'm just over exaggerating, but everything is going up in price right now. And so what made you think that GameStop is not going to make that price surge as well? And I was telling people at my work too that, think about it. Okay, so right now, how much can you buy for $17? I mean, right now, can you buy $17? I mean, and then if you span that to 10 years from now, how many things do you think you could buy with $17? How much thing? I bet you anything you probably couldn't get a Big Mac for just a sandwich for $17. You can't. I mean, right now, I don't know. What is the price of Big Mac right now? So let's do this. Price of Big Mac. Big Mac is like, I feel like the cheapest. Okay, so a Big Mac right now is $7.73. Big Mac meal. How about that? 2003. In Connecticut, $18. What is in California though? That's insanity. Photo of Connecticut. Yeah, I don't even know where the Connecticut is, but that's insanity. Price in the US. So McDonald's price in the US. So breakfast right now. Let's see. Menu item 20 pieces. Big Mac meal right there. So $13 right now. So you think the price of Big Mac will stay at $13? Or it's going to be higher in 10 years. So again, I'm doing that because I'm like, okay, in 10 years, everything's going to go up in price. So therefore, the price of GameStop's going to go up with it as well, right? So there you go. You know, this is a prediction of a lifetime. Again, like the day-to-day price action is actually very distracting. Unless you are a day trader and you love doing that, predicting the price day to day, that's the only way that you could love doing this. But as far as people who want to invest and have full-time job and, you know, don't have the ability to check, you know, the price action every single day, the best thing that you could do is just to invest it in long term, right? So anyway, so that's the whole point of me looking up that. Nevada is $13 right now. Oh wow! So it's higher too. In-N-Out over Big Mac any day. Yes, I love In-N-Out too. I love their fries, the animal style fries. Oof, so good. Short and distort is illegal too. Yeah, of course, but nobody reinforce it, you know? And they do this all the time. I mean, the SEC hasn't done anything. You know, what is this? What is this? You know, GameStop new investment policy alarming and inane, whatever that means, you know? Say wet bush now, wet bush. And I bet you anything, the SEC have the ability to see what wet bush position is. I bet you anything. And they don't say anything. You know, this is a short and distort, right? You bashing the stock, but then, you know, the regulator, they're saying like, oh, we shouldn't have the ability to gather in the social media, you know, platform in order to buy one stock. It's like, what? It's like individual investor who wants to see the company succeed should be the one that, you know, kind of, you know, be elevated, because when the company succeed, the country also succeed as well. You know, you don't want zombie company to run amok in you know, the greatest economy ever. You don't. You know, the whole reason why they want you to buy into those heavily indebted company is because they want you to over leverage yourself in that way. They always want you to borrow to the till, you know. Oh, go borrow. If you want to go get an education, go borrow, you know. Oh, you want to, I don't know, buy a new car? Oh, get a $50,000 car. You know, pay for it tomorrow. Pay for it over 7 years of your life. Just $500 a month on a car payment. Ridiculous. Do you remember when McChicken used to be a big chicken nuggets? Yeah. I like the very first version of it. Oh wow. I don't know. I don't remember that because I used to Well, McChicken, yes, I've had that sandwich before. I like that one. I think they still have that. But I remember it used to be $1 per McChicken. I know. Yeah, McDonald's is so bad. Like, have you seen the fry thing? Hold on, let me show you that. I might get flack though. But it's okay. McDonald's fries. Let me see. It was one of those. This one right here.
Customers love our fries.
It starts
Oh,
on the
and how
phone.
it made. That's not the one. Okay, I think it's this one. Let's listen in. This might scare some of you. It scared me, that's for sure.
World, you will find,
Okay. Let's listen.
if you go to McDonald's, anywhere in the world, you will find French fries, or chips, as you call them, and you will find that they're always made from the same potato, the russet Burbank potato. This is a potato from America that's unusually long and difficult to grow, but that's what they want, because when you're McDonald's, you like those red boxes with a little bouquet of very long chips. It looks really good. And so they insist that all their potatoes be russet Burbanks, and they further insist that they have no blemishes at all. There's a very common defect of russet Burbank potatoes called net necrosis. And you've seen potatoes with a little brown line sometimes, or spots that come through it. Well, McDonald's won't buy them if your potatoes have that. And the only way to eliminate that is to eliminate an aphid. And the only way to do that is with a pesticide called Monitor that is so toxic that the farmers who grow these potatoes in Idaho won't venture outside into their fields for 5 days after they spray. And then when they harvest their potatoes, they have to put them in these atmosphere-controlled sheds the size of a football stadium because they're not edible for 6 weeks. They have to off-gas all the chemicals in them. So you see, the desire for a certain kind of chip leads to a certain kind of agriculture. But the other thing on the health side, when I started learning about nutrition, about which by the way, much less is known than you might think, that the scientific understanding of nutrition is still very primitive. But I learned that what mattered most about one's health was not necessarily the nutrients, good or bad, that you were consuming or staying away from, or even the calorie counts. But what predicted a healthy diet more than anything else is the fact that it was being cooked by a human being and not a corporation. Corporations cook very differently than people do. They use vast amounts of salt, fat, and sugar, much more than you would ever use in your own cooking. And the reason they do that is those are three incredibly attractive and incredibly cheap ingredients. And when they're layered properly, as in a chip or various pastries and forms of junk food, they're incredibly addictive. And in fact, people in the industry, they don't talk about addiction in the food industry, even though they traffic in addiction. They talk about craveability. It's the same thing. And snackability is another term they use. It's a lovely word. Anyway, so I came to see that cooking has a huge bearing on our health. And in fact, there's been a lot of research in America that shows that even poor women who cook have healthier diets than wealthy women who don't.
Wow.
So you see, the usual class bias in the quality of diet is overtaken by this fact, this key fact. Who's cooking your food?
That is so true. Like the food industry is so gross sometimes. Okay, let's watch one more time. One more thing right here. This is what scared me too. And I love this fries. Don't get me wrong. Like, I love it. But I haven't touched it like ever since. From time to time, I'm like, oh, did I just order this fries? But man, it's really good. It's really bad for you though.
Which is worse, this pack of Marlboro Reds or this French fries from McDonald's?
I'm a board certified MD, and you're not going to believe what I'm about to tell you. Acrolein is a toxic substance known to be in the gaseous form of cigarette smoke, also known to cause cancer by harming your DNA metabolic pathways. You're not going to believe that this package of French fries has more acrolein in it than this package of smokes. Acrolein is a toxic substance. You must avoid it. You should not be feeding your children or yourself McDonald's French fries. These French fries contain more than 100 cigarettes full of acrolein. Why am I telling you this? Because people need to know. Which is worse? This
Wow. See? But I don't know, again, like, if you were to show that to people, they're like, oh, really? You believe in the TikToker? Like, people are making video on TikTok? Now, again, like, I don't know how, this guy, I don't know him personally, but I hope he's telling the truth. But, there should be a study, right, that are doing this type of work where, to look into those big box, big companies like this, that they don't really care about the well-being of people, their customer, right? They just want to address it in like a sheep in wolf clothing kind of thing, right? It's like, hey, it looks great, look at it, it tastes great, so it must be good, like fresh and all that stuff, right? But again, if you have chemicals like that to try to get to that perfection, there bounds to be some health, issue that's gonna arise from ingesting all those things. But corporation has their way of getting away with those type of things because of, number one, you don't have good regulator who, like a regulator capture type of things, right? And it's in everywhere, in the food industry, in the financial industry. There's a lot of that happening. If you could kind of draw the same like a correlation between the industries, every single industry is affected by this because we have the corrupt system, is that we don't have those healthy check and balances to be able to catch these type of corporation who do these things, who use this chemical in order to make their food more addictive, they're more digestible, but in only on the surface, right? But then internally, you could feel like, hey, every time you eat a certain thing for a certain time period, you feel terrible, you feel bad, or you feel more addicted more than ever, right? Sweet and, cookies and all that stuff. Even coffee, I'm addicted to coffee, my own self here. Coffee cream and all that stuff. So, you have to question yourself, like, these food industry, they know us more than we know ourselves, like our psyche, our physiological response to those foods, and as the gentleman before that was saying about how McDonald's, if the industry is cooking the food, you'd be surprised that they will use all those chemicals to preserve the food for long in order to be able to sell you more, and then lower cost because they're not throwing food away when it's spoiling, right? So all of it just to make profit, though, of course, right? And I know, like, if you own those company, you would be elated by that. Of course they want you to, you would want your company to sell food to people and more, right? But why not do it ethically, right? You could do that. I mean, we have the technology to do it. Yes, it's going to take some time to get to that point, right? Rather than destroy everything and in 1 year or 2 years. You could build something in 10 years, but then have people, come to you for I guess, look up to you in that sense, right? And this is why I'm kind of going off tangent here. I apologize. But I promise it's related to Ryan Cohen. This is why I love Ryan Cohen so much, because again, he's here building something great right now, right? And it's going to take some time, but at least he's planning to build something great. And hopefully, you know, it's going to last forever. Something that is more beautiful than anything, right? Like that, you know, the fact that he used his own money, right? Didn't have any shares, didn't get any rewarded shares as a chairman, right? And as a CEO, he's been buying, right? Well, as a CEO, not yet though. When did he name to CEO? I think it's kind of recently, right here, right? But he bought around here as a chairman, using his own money again. And so, and you know, he said it in his tweets too, that he hates overpaid executive. He hates them. That corporate America has been overpaying executive, highly paid consultant who doesn't do anything for the company. They're just there to leech off of the company, draining the company resources, and do nothing for the company, right? So he doesn't like any of those people that doesn't do the actual work to add value to shareholders, so to speak. Sorry, you guys, I don't know why I went off that tangent, but it was fun. Thank you for sitting through that. I remember very clearly bashing McDonald's. In-N-Out fries have that I've seen. Do you mean like that little black spot? Is that what you mean? I like In-N-Out fries. Like it seems fresh to me. So I might be wrong, but we'll see. There's no bad publicity or bad video about In-N-Out fries yet. So. But from what I understand is that they do make it daily, like from fresh potato. You could see it, you know, them kind of shredding it through the cutter, you know. Anyway, so let's get to I guess GameStop Twitter. Let's scroll through it real quick. I'm always on this page here just to see what they're posting, and oftentimes, you know, I see them post all the time, every single day, kind of like engaging with people. You know, sometimes I would see poll or something like that, but mostly just promoting their product, right? And you know, the controller, you know, they have new controller all the time, highly customizable. See, you could switch it anywhere you want. And so this type of thing is really good. Like that's what entice people to want to go to GameStop, right? It's like, hey, oh, they have this cool gadget right here, right? Again, and this is like a free publicity. You don't need to like pay actresses to promote your goods and services when you have naturally people just following them because of the storyline or because they're just amused by it, you know, whatever the case might be. And so, all right. What else did I have here? Sorry, I had something. Oh no, did I miss it? Okay, I will find it. You guys. So it has to do with the outstanding shares, and I'm sure you guys know this. Like, so the breakdown was that there were more shares in circulation than the outstanding shares. I forgot who had it up. It was on Twitter or X. So today it looks like there were 1 million shares being available for shorting for 4% annually. So they had to pay 4% annual rate in order to obtain 1 million shares to short. Okay, so that's what it means right there. Fees, cost to borrow or whatever. And then they have rebate fee. I'm not quite sure what that is. Maybe they get reimbursed back, 1% right there. Hi, where the heck is it? You guys, I'm sorry. Okay, give me a minute. Give me 1 minute. I think I have mine here. So let's use mine. So the breakdown that I saw was a little bit different, but essentially that that breakdown kind of show you this, right? Show you the outstanding shares, which is this amount right here, a little bit less. And then you have institutional ownership right there. And then shorted shares, this is the amount being reported. And then they have DRS shares, right? And then technically whatever leftovers is owners, retail loans. But there were brokerage accounts that was not being reported, right? Even with that not being reported, the share came out to be, I should do a snapshot, but I apologize, you guys. But trust me. I hate when I say that. Here we go. So the total shares, when you add all those together, not including the brokerage account, would come out to be 20 million shares over the outstanding. So that's in the nutshell what was shown to me. I don't know. Again, in a sense, I feel like it's probably way more than this, but there's no way of retail like us to know the actual number. All we could extrapolate is from this right here, the publicly known data that we're being told, right, on this website right here. And so if this website could publish it, that means at least some truth is in there, that you could kind of take what you could get from here, and then knowing what all of the buckets are, number of shorted shares, number of institution ownership right there, DRS, right, we could extrapolate that we have at least this amount. Now if one person or 100,000 person were to own GameStop, right, all they need to own is this amount right here to own all of the floats, right? The rest of what retail ownership would be, right? And then if you have 200,000, then you own half of what this is. If you have 500,000 people, all they need to own each is 139 each, right? And I'm sure most of you has more than 139 shares, right? And then on top of that, you could kind of, are there only 500,000 people owning GameStop? Is that plausible to think? So it's up to you. Again, like the number could go up to 1 million individual investor who actually own GameStop. At least I know one person owned more than 100,000 shares. So that's one individual investor. So I could not imagine after 3 years, it's even lower than that. And you could kind of see or say that, all of them sell out already. Okay, sure. That might be true. But if this low amount of money, this low amount of shares being owned by 100,000 persons, it's doable still to be able to own, you know, the rest of the company, so to speak. I mean, just Ryan Cohen alone, I bet, you know, he's probably more than 12% right there already, just him alone, one person. So it's not far-fetched to think that it's a lot higher than this number right here. But again, we have no way of verifying that number right there. All right, guys, that's all I have. I'm kind of like tired at the moment. But yeah, thank you so much for kind of sitting through my rambling on about nothing at all. And enjoying, you know, the time to accumulate GameStop at this price point right here. So, all right, guys, that's all I have. I will see you tomorrow, and we will see what's going on with the price action for GameStop. Yeah. Let's go. Let's go. Sorry, I'm looking at the indicator here. It makes no sense to me. Okay. All right. That's all I have. Okay.